Hey, hello. Welcome to another new episode of Weekly Stock Market Analysis, where we look at the technical charts and then try to understand what happened in the market in the previous week and also plan for a better trading week for the upcoming week that's starting from tomorrow, October 21st, Monday, 2024. Let's get in the charts and then come back to the wrap-up. So here's the weekly Nifty that you're seeing on the left side. That was an ascending wedge, and price got hit on the top of the wedge and then has taken support and then moving exponential moving averages and then bounced up. So very steep rally can clearly be seen. On the right hand side you see the daily, where there is some correction that just 6.5% that has happened, and seems like it has taken a support at this span of time. On the Banknifty, it is a much more narrower ascending wedge that has hit the top of that wedge and then bounced down. Once again, it has taken a support at the exponential moving averages 20. And the right side, the daily charts of the Banknifty is showing that it is it's a parallel channel, and market is corrected 8.5% after making all-time highs, and then seems to be bouncing up, ready for reversal, looks like. So that's what has happened. So basically, on a week-to-week basis, Nifty has closed negative, nearly 0.5%, 0.44, like 10 points down, and it is closed not only below the 20 exponential moving average but 50 as well, and 25,000. The rounding number is quite far away. I mean, 150.7. Did manage to close above that despite Friday's reversal. And the correction that has happened for this time, it's once again a short one, 6.5% in 4 weeks, and remember that's 72% of big rally, bullish rally that has started from the previous swing lows of June 2022. While the banking index, it was very volatile, just like how Nifty was previous week, went up and down, and it did a big up move reversal on Friday, and that the bank index, contrary to the main index of Nifty, it is close nearly 2% up. That's 932 points. So there is a divergence in the price moves between Nifty and the bank. Nifty seems to have closed above the 20 exponential moving average, which is indicating that there is bullish. Correction so far has happened as 8.5% in the last 4 weeks. So that's about it. Now look at the candlesticks. You have the weekly on the left on Nifty and right side Bank Nifty weekly chart. So the candlestick is almost like a hammer. Neither is it spinning top. Looks almost like a hammer, but the wick is a little more on the pin. So regardless, compared to the wick size, the body of the candle is very small, which indicates there is some indecisiveness, and the wick size in the bottom indicates it is good support on the downside, and this is a zone of change in polarity. So there is a possibility of a bounce from here, where the previous resistance zone acts as the support. In the Bank Nifty, on the contrary, you see a very bullish candle, wide range, and it seems to have taken a CIP support, and that bounce has already begun after the correction of 8.5% sharp 3 weeks. So that's the weekly candle. So divergence in the price action, divergence in the bullishness. So if you look at the daily charts, the last 5 candles, if you see, it was left side Nifty, you can see that it was sliding down from Tuesday, and it did make a low very close to the 25,500 and then bounced up on Friday. While Bank Nifty was not sliding down constantly, it was very volatile. If you see the 5 days, it tried to move up and then move down, and then Friday it bounced up. So it was more volatile in that sense. So daily candlesticks wide range bullish on both of them on Friday. So that's about the price action. So it's almost like a hammer on the weekly on Nifty, and a bear trap. Well, price moved down and then trapped the bears and then moved up about the previous candle's low. So it was a bear trap on the daily one and a green candle. So there's a wide range bullish green candle again on the Bank Nifty as well on the short term, but on the weekly calls it's a bear trap, and it ended up as a bullish weekly candle as against a bearish candle on the Nifty. So change of polarity bounces there both, and Bollinger Bands, if you see, this is what it looks like. It was having an expansion of the downside of the Bollinger Bands, which indicates there's probably a more down move, and it's still having a bearish bias because it's below the median of the Bollinger Bands 20 moving average. Banknifty also, the consolidation has turned out to be an expansion of the downside, indicates more downward, still bearish bias because it's below the 20 moving average, which is the median of the Bollinger Band. So that's what short-term Bollinger Bands indicates, more downfall, looking at the expansion of the downside. Right. So until you see expansion of the upside, it could be consolidation with bullish or bearish. That's now it's bearish biased. That's all about the price action charts and patterns, weekly and the daily time frames on both indices. Now let's look at the momentum and the trend. We are using the RSI. We are doing multiple time frames on weekly as well as daily. Left side you see weekly, you're seeing weekly. Right side you are seeing left side you are seeing weekly, and right side you are seeing the daily. And that's for both indices. So momentum has slips sideways on both time frames. On both indices, that's the nutshell. Right, momentum because it's RSI below 60 and above 40 is sideways. So sideways rising momentum, and sideways rising momentum is seen in the Banknifty also in the short. But in the weekly charts, you can see in sideways itself, but it's slightly contrary. There is a rising momentum sideways itself in the case of Banknifty, while it's falling sideways momentum in the case of weekly charts of Nifty. So the ADX indicators indicates that the bearishness is still there. The bearishness has not crossed over the bull zones yet. It's DMI negative, but there is a difference in the strength of that. It's rising trend strength and it's falling trend strength in the case of weekly, in the case of daily and weekly, or in the case of Nifty. While it's almost falling trend strength with the bearish in the bearish zones in the case of Banknifty and both. Slightly flattish trends in the case of that means the bearish is reduced a little bit on the weekly time frames on the Banknifty. So otherwise the momentum is there's a correction here, sorry for that. The momentum is sideways and the trend is continue to be bearish. That's a summary of it. Once again, if you look at the charts on the right side, you have the India VIX, the volatility index. So the fear and greed index is kind of flattish close. There's 2% down last week and it's at 13 instead of volatility reaching. That's about momentum, trend and volatility. Moving ahead, we'll try to understand what the open interest analysis is doing. It's a short covering build up on Friday. Friday had a big reversal move, and short covering is a build up that has happened on both the dice, which is very positive. It's for the weekly expiry in the options, October 23rd, 24th, Banknifty and Nifty. The put correlations and options on our charts is again varying. There is variance that is seen, there is divergence that is seen between the put correlations as well. Well, Nifty is bearish and Banknifty is bullish, 1.26 above 1. So open interest is overall we can see open interest is showing bullishness with slight options. Open interest PCR showing slight bearishness in the case of Nifty. That's about it. The levels that you see here is for the next expiry left hand Nifty and the Banknifty. So let's try to analyze where the highest put and call writing is there. So Nifty has got 24,500 where the highest support is seen, put writing is seen there. Highest resistance seen at 25,000, that's where the highest call writing is seen. Second highest put and call writing is at 24,800 and 25,500. So it's a very narrow range where it is playing sideways markets. And on the Banknifty it is 51,000, 53,000. That's a wider range, right? 1,500 points range, and that's where the highest put and call rating is seen on the Banknifty. Second highest is at 52,000, 52,500. A very narrow range in the case of Nifty and the Banknifty. Second highest put and call rating on the weekly expiry. Otherwise, PCR, you know, it's divergence and futures was Friday good short covering build up, which is bullish in nature. So that's about support resistance that we understand from the open interest. Now looking at the technical charts that's given for the Nifty and the Banknifty, we have derived these levels. Basically, the major resistance is going to be this moving average of 50 and 100 that's coming here, and then after that you have the gap that is coming at 25.8. 25.850 zone, and that's also a previous resistance that's coming very close to that, and that's very high all-time high. That's how the resistance is upside. And downside, you would have several 100 exponential moving average, and then Fibonacci 38 retracement, then previous swing lows that's coming at near 24,000. 24,000 is going to be a very good support if it is sliding further down. After that, it's Fibonacci 50 retracement level at 23,740, and then it comes to the 23,282. That is where the 200 exponential moving average is there. That's about the Nifty. Banknifty similarly has climbed above the 20 exponential moving average. First resistance with a gap at 52,818, and after that you have 53,358. That's where the previous resistance is there. When the breakout happened. in the month of September. And after that, you have 54,000 big rounding number, then 54,500 over the all-time highs there. Downside for support could come in at 100 exponential moving average at 51,200 or 51,000 nearby zones. Now it is breached the previous lows. Fibonacci 50 confluence is coming at 50,200. 50,000 again is going to be a big rounding number. Previous lows comes below that, 49,650. The total expansion comes at 29,300. Last supports, it also confluence with Fibonacci 60 raise levels. Right. So that's the levels that's marked in here. Making all of these levels that's put in here. In the bracket rounding number is RN, PSL is previous swing lows, rounding, and 20 exponential moving average, previous resistance, gap, window gap. That's also making all of these levels. Try to understand support and resistance levels based on the charts as well as the open interest in the options. And then come to a conclusion on the places where you have to place the bets on the upside or downside. Right? Let's move ahead and see how the different industrial sectors have performed. Right. It doesn't underperform. All the sectors are bearish. None of the sectors are bullish in both time frames. So you just have to wait for things to change. But otherwise, if you look, it was a down there in all the major sectors like ID, metal, auto, pharma, FMCG, all except the reality is slightly short, 0.5% of up move. Logic and so. The bearishness is seen in the auto sector short up and FMCG also short up. That's where the bearishness is coming. Otherwise, it's all sideways in both time frames if you see. So auto is something that you'll be cautious about. Right? So IT has also not performed last week. It's the defensive sector. Farm also was 1% down. Metal was hit even badly, nearly 2% down. And what was hit really bad was 5% fall on the auto sector. So auto is something very big cautious about. Same thing in the different sector indices are put here. Have a look at that. On the top you have the IT index, which is consolidating at the top, keeping the momentum up in the bullish zones itself on the medium term. And metals a slight pullback after having reversed and trying to move to the top of the channels, but momentum is slightly similar in the sideways. In the medium term, auto sector as well, it has retraced for the last 2 weeks consistently, 2 or 3 weeks actually, and slipped in the sideways slightly in the medium term. And pharma is a sector that's consolidating in the very top in the bullish zones. FMCG sector has been retracing for the last 3 or 4 weeks, and it has also slipped in the medium term in the sideways momentum. And finally, the reality is showing some consolidation at the very top, which seems to be forming a small cup and handle on the medium term, and then try to move up once again towards the channel top. Momentum slipped to the sideways. So overall, it's all sideways, and FMCG and auto has hit back badly. On the medium term, it is all sideways. That means the weekly chart showing momentum sideways on all of the major sector indices. Make note of that. But none of them is in bear zones in the medium term yet. Now let's look at the heavyweight stocks that contribute maximum to the dice. Beginning with HDFC Bank. After having slipped to the sideways, it is trying to move up once again, but still sideways, and trend is also in the bear zones. Right, so remember, it has multiple failures at that same zone of resistance and is unable to break out. So it has been consolidating like this for several years now. Bank, right? It's a major sectoral index, a little bit maximum to both indices. Lands had been retracing after a consolidation breakdown that happened 3 weeks back, and then it is very close to its twin line support zone, so near the 26,650 nearby that zone. So looks like it is trying to consolidate and sell at candle. Is very close to the RSI 40 support zones, and trend is bearish. So medium term, Reliance is one of the stocks that is hit badly. 15% or more retracement has come in, and then probably it's a buying opportunity for long term investors. But yeah, it's a time of consolidation, and that's what is holding the market, pulling the market now. Major reason for that is Reliance. ICICI Bank has given once again a bounce after having slipped to the sideways. Seems like it is steadily moving up in that trend line. The trend is, while momentum is trying to climb back into the bullish zones once again. Right, so IT sector, Infosys is consolidating at the very top in the momentum, maintaining the bullishness, and TCS momentum falling the sideways, and then having retraced since last several weeks now. TCS. Those are the two IT stocks, correct? Bank Limited has been consolidating, moving in a range bound manner for several years. No change in that. ITC has been retracing for the last 3 weeks, and then seems like it is trying to find some support to form a cup and handle. There's a chance that it can slip a little more towards the 450 zone, and then it can move. towards a breakout of the cup and handle. So right now the momentum has slipped to the sideways. So almost all the major sectors except for the Infosys probably and ICICI Bank, all the other major, all of the 5 major heavyweight stocks have slipped to the sideways on the weekly charts. What you see, but none of them in the bear zones yet on the medium term. Looking at the broader markets, mid cap and small cap. A red week, industry small body week on the small cap, but the small cap has got a divergence, which indicates that there is a possibility that it can go to the top of the channel, making new all-time highs. Same with the mid cap also. There's a bullish positive reverse divergence that is seen on the momentum down on the weekly charts, and price is more or less near the all-time high itself, despite the fact that 7 to 8% of corrections happening at times. Mid cap seems to be still strong, but we have a industry bearish close on both indices this week. Slightly positive industry doji close on the small cap. That's about the markets, and let's now move on and try to understand how the institutions have participated. Otherwise, I've been selling 70,000, 75,000, 80,000 crores kind of money since the last 2 weeks or more. And domestic institutions have been constantly putting in the mutual fund money, and 16,384 crores of buying, but not enough to compensate 21,824 crores of selling that has happened to the FIs. The FIs selling is a concern. The FIs are said to be pulling out the money into the China market, following some policy changes that is expected in the China's economy, and that's the irony. Domestic institutions are getting, people are not putting in money. People have shifted the family savings in the stock market, looks like, and that's the only reason the market is not crashing 15-20% just like it used to be earlier, despite the fact that the FIs are selling. So net longs on the derivatives on the FIDA also has moved on last week. Right, you can see the big selling that has been there since almost several days, right? Since this is almost a month, it has been selling. 3 weeks or something. Consistent selling except on one day on September. September 20th, there is a big buying for the FIs. That's it. Otherwise, it's been constantly selling and constant buying in the case of the situation. So, yeah. So the story continues there. You have to keep a close watch on the. Moving ahead, we'll try to understand the global markets, the currencies, the global commodities like gold, oil, and all that. Looking at the currencies, dollar index has closed positive 0.5% up. It's a 6.6%, 6.5% move now. Basically, it's consolidating in a range more manner as you see on the chart on the top. USD INR on the other hand has had a flattish close of negative 0.05. It's at 84 plus. So rupee remains to be very weak, and this one hasn't been well checked, central bank managed. Right. Only crude oil has taken a dip after the recent spike that happened, which pushed it towards 13% upward to the channel top, and so seems like it's cooling down. Once again, it has fallen down below 20. Once again, 68.7 crude oil. Probably after the warfare has reduced, the oil price was also cooled off. OPEC listing, I don't know what is it, but yeah. It's well in control and it's good for oil importing economic levels. Right? Oil as of now is dipping sideways and cooled off below the 70 is good. So here is the thing, gold has made new all-time high once again with a very wide range bullish candle. So that is a 28% breakout just in 2024, and that's a golden year. And after long years of consolidating, it is a big breakout year that has happened. It's at $2,721 all-time highs. Gold moving up could be an indication of people shifting the money to safer havens like gold. So it's a concern, but as a hedging instrument, it helps when the market corrects. Momentum is bullish, absolutely. On global markets, you're seeing the Dow Jones, Nasdaq, and S&P 500. The US is the mother market, so you have to see that. You see that it's a green all over, except for Nasdaq, which is giving some deceiveness, but it's at all-time highs on the major indices of Dow Jones and S&P 500. So US markets are green. Oil is cooling off, right? Rupee remains weak and gold is spiking up is the concerns, but otherwise global news are okay. But still, the concern on the Israel retaliation to the Iran that can come in any time, so I'll be cautious about the fact that way global cues are not great. But market wise and it seems like the cues are good in favor as of now. That's about analysis, and then let's try to understand what are the stock picks or actionables for the next week. Two stock picks, one is in short side, one is on the long side. On the short side, you have Nestle Reason why, it's on a correction path of the last 3 weeks and moving down towards the bottom of the trend line channel, and there's every chance it hits that bottom and finds the supports there. So it's one is to RiskReward. Reason for the taking is big volumes, red, and moment having slipped below the RSI 40, and trend having crossed over the bear zones and rising up in the strength. So Nestle India, what is it? RiskReward, short-term swing trading opportunity for 1 or 2 weeks. That's all. Yet here there's a couple handle breakout that's ongoing, and there seems like it may have more space to go. All the volumes and trend seems to be good. And that's the 2 stock picks, and now we have an FNO strategy, weekly Batman strategy with completely hedged, positions is what you're saying. Basically, you're selling twice as much as you're buying the inside hedges. Then you have the outside hedge as well, right? And you'll have a reasonable profit as long as the market remains in this good range that we're getting between 24,500 and 25,500, 400. So if there is a spike coming, you may gain a little more, but if it is breaking out on either sides, it may be difficult to adjust, but you still can do. You can roll down, you can do, but it may not work out when the premiums are very low. So exit, take the loss, and exit if there is breach of this break-even point that's coming at this point on either side. Very good range, reasonable RiskReward, and RiskReward reasonable in the sense that you'll have to exit before the last day of the expiry. Probability of profit is reasonable, very good range, and then very low margin, right? So it's a risk-defined Batman strategy for the weekly Nifty options for the next week. That's what we have. 2 actionables on the stocks as well as in the FNO. Let's just wrap it up. Markets slipped further, correction extending to 6.5 and 8.5%. Banknifty doing good and managing to close very positive, diving into how the Nifty is doing. But both the indices try to reverse the bullish moves on Friday. Remember, this is in between a 67 to 72% of rally. The correction so far, the biggest one that has happened is only 10 to 11% from the last June of 2022 swing lows. It's trying to bucket in what's in favor of bulls and what's in favor of the bears. So just seeing polarity bounce, we've already seen that. That's a positive. Probability of a bullish bounce. So changing polarity, not a confirmation. It is kind of a confirmation of the Banknifty, but Nifty is yet to confirm. It is taking a support of that neckline of that change in polarity. The Banknifty is having a bullish candle on the weekly and the time, and that's positive. Futures OI is bullish on both. It is having short covering built up on Friday on both the dice, which is positive. Most of the heavyweights and the sectoral indices and board macro, they're all just sideways around bearish on the weekly medium term. Yeah. Banknifty having a PCR on the options open interest is bullish, and 1.26 is very bullish. US market is all green at the very top. India mix has cooled up and remained at the low altitude regime, and Banknifty declined above the 20 exponential moving average. Several factors that seems to be in favor of the bulls, and then bulls are getting more and more parameters in favor of them as compared to the last week. Now, what's in favor of the bears? It's bearish candle on the Nifty weekly. It's a sideways momentum, and the bearish trend that continues. The crossover in the gold zones has not happened yet. It's a bearish PCR on the Nifty, less than 1. It's the FIs that has been selling like hell. It's the Bollinger Bands which continue to show an expansion on the downside with the bearish bias. It's the below 50 and below 20 expansion moving average that is here on the Nifty charts. These are the factors in favor of the bear. So you will have to judge and come out to a view based on what are the chances after studying all these parameters together. It's up to you to take your questions or take your view for the market. Right? I would put in my view, but it's up to you to decide based on different studies on different parameters that we had been doing all this through. So we have to be cautious before taking long questions, because the market's in the correction mode and they could happen. Reversal also is very strong on Banknifty, so it could happen on the other side as well. Technically, market is showing a recovery attempt, and remember, it is what is again a short corrections, and not as of now remains sideways with bearish biased. Market view remains mildly bearish biased for the next week for me. So the global cues like the war, the pandemics, and all this can screw up the technical analysis. You have to be aware of this fact, right? They're not as black swans, and then things go out of your control, and that's where portfolio level hedges in the portion level hedging strategies where you're playing derivatives or the bias. That's how these things are very important. So keep that in mind. Always hedge your portions. So next week 23,500 and 26,000 is the wide range that I have for the Nifty, and 49,300 and 53,500 is the range that I have for the Banknifty. And as long as the market is trying to close above this 26,000 and 54,000, that's where the next leg of the rally begins. Until then, it will be consolidation, right? And that's all I have for this week, right? If you like the content, subscribe and like and share and put in your comments, feedback and all that. I'm also active on Twitter on a daily basis, so subscribe to that as well if you would like. That's what I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.